I always like starting off this specific I like starting off this specific class with this article, right? And if you don't know who Peter Thiel is, Peter Thiel really got famous for investing in Facebook really early on. He was already a pretty successful VC or investor at that time, but I feel like Facebook was the one that really set him on the map. And what happened was, and not only that, but like he did stuff with like eBay and a bunch of other things. But Peter Thiel had a Roth IRA, and he was able to acquire shares at a very, very cheap price, and all those shares exploded. Nevertheless, Peter Thiel has $5 billion in tax-free retirement account, right? Literally, if he pulls that out at the appropriate time, he will not have to pay the government on $5 billion worth of gains. And that's insane, right? And you're like, how is that even legal? Well, it's like this process is legal. It pissed off the government so bad that they want to actually change the law on what you can and can't do in a Roth IRA. If that just gives you an example, right? I'm a big believer. If the government is restricting something, especially on savings accounts, retirements accounts, you know it must be good for you. And the reason why they don't like it is because, again, you can get away with not paying taxes legally on all the gains that you make inside of a Roth IRA. Now, caveat, there are some cons to this, and I will go through them as we go through the deck. But I really like just starting off with this to give you an idea of what is even possible. This is an anomaly, right? This is not going to happen to every single, not all of us are going to make $5 billion, and probably none of us are going to make $5 billion in trading. But hey, a couple hundred grand and not having to pay taxes on that, that's actually pretty doable, right? We have a couple people in here who make a couple grand a year, 100 grand a year. And if they could do it successfully within a Roth IRA, they wouldn't have to pay taxes, right? So just wanted to kind of throw that out there to kind of level set with you guys. No, James, he won't. And I'm going to explain that to you right now. He does not have to. Anyways, let's get started. Where are you? Here you are. No, here. So James, so a lot of people don't know, right? Like, what's a Roth IRA? Essentially, when I talk about a Roth IRA and people who might be familiar with IRAs, it's just a tax advantage retirement account. Yes, this is a retirement account. This is meant for a long-term trade. This is meant for really, really long term. Not that long, guys, right? Essentially, and James, this is just to clarify, you can grow anything in there. And once you turn 59 and a half, right? Literally at the half of before you turn 60, you will be able to take out all of the growth within there tax-free, completely tax-free. Now, the account has to have been open for at least 5 years. Like I said, there are some stipulations to this, right? So as long, let's say you open it right now, I'm 29. I keep growing this. I keep growing it. I keep growing it. Let's say I make $1 million in my Roth IRA. I turn 59 and a half in about 30 years. And then I take out, it's like, you know what? I'm taking out my million. I'm retiring. I'm going to use that to invest in some other things. I will be able to legally take that out, James, without the government being able to tell me yes or no. That is my money to keep. That is the beauty of the Roth IRA, right? The issue I think that comes around is that a lot of us are very short-minded and we want the money now. So I'll teach you how to work with the requirements that Roth IRAs give you. But essentially, as long as you trade within this account up to 59 and a half, and you can keep going, right? Even if you turn 67, you can still trade in it and it can still accumulate. But anything you grow in there, 59 and a half, longer than 5 years, all of that tax-free, right? Now, there are like a couple different distinctions with a regular IRA. Was it James or someone else who had a regular IRA? Who was it? Yeah, James, it was you. You get a tax deduction up front, right? So if you actually contribute to your IRA right now, the IRS will then discount that from your current taxes. And I don't know the exact I don't know the exact limit that the regular IRAs, the regular IRAs have, or the traditional IRAs. Roth's currently at 6.5, so $6,500 is what you can actually contribute to it every single year. You do not get a tax break up front. This is again for the longer term and on the back end, right? This is in the back end. When you turn 59 and a half, that's where you get your tax break. Now, some people will be like, is that worth it? Is it worth not getting a $6,000 tax reduction now versus getting a whatever tax reduction in the future, right? Depending on how big you grow the account. That's the give and take that you are going to have to decide as a trader, as an investor, depending on what your goal is with your Roth IRA, right? So that is going to be the difference here. But the beauty of it, again, as you grow, you get a higher paying job, or maybe you make more money. Maybe you start getting in rental properties like Ready. That means you make more money. If you make more money, that means you're in a higher tax bracket. If you're in a higher tax bracket, you're going to pay more taxes regardless. But with the beauty of the Roth IRA is it doesn't matter. None of that really matters. And that's the whole point of it versus maybe early on, sure, you're taking a tax break of 6K, but you're only making 30, 40, 50 grand. It doesn't matter. It doesn't really make that much big of a difference, right? So we'll have to keep that in mind as we go through this all. I'm not going to bore you guys too long because it's a pretty straightforward explanation, but I'm really glad that, we're having this conversation. So understanding Roth IRA, I think I kind of went over this. And again, it's just another form of retirement. Opening a Roth IRA doesn't matter how old you are, doesn't matter how much, actually it does matter how much you make. You essentially, and I would only open a Roth IRA under a very established brokerage. I would not open it inside of Webull Traders. I would not open it in anything that's maybe offshore. I know the big ones right now are Schwab, Fidelity. I'm not sure if E-Trade's still around, but I would do it in a very secure brokerage. I would not touch any of these new brokerages because if anything happens down the line, who knows if Robinhood or Webull are going to be able to pay you guys out. RJ says, is there a way to invest more than 6K? Yes and no, RJ. So currently, and I'll talk about it because it's literally the last piece on the slide, is that the IRS decided to give you guys $500 more. So you're actually able to invest $7,000 a year. But it's every year, RJ. Every year you're able to add 6K, right? Plus whatever you make. So let's say, RJ, for example, you invest 6K today. You invest for a year, you flip that, you get that up to 12K. So now your Roth IRA has 12K. By the next year comes around, you invest another 6K. So now you have 18K, and then that keeps flipping and flipping and flipping, plus your contributions that you're adding inside of the Roth IRA. There's something called backdoor Roth IRAs, which is something for people who have higher net worths that they can take a look at. Again, that's something I highly encourage you guys to talk to with your tax person, not something you should do with me. But this is just for you guys to get excited, for you guys to get curious and go start looking for this, right? So if you're saying, man, it's so late, the year's about to end, we're already in November. It's going to be December soon. Next thing you know, it's January. Can I still open a Roth IRA? Can I still invest into it? Yes, you can. And the beauty is it's based off of the tax deadlines, right? So by the next tax date, which would be April 15th, you can still invest in the 2023 Roth IRA, even though we'll be in 2024. Now, if you've already maxed out your 2023 Roth IRA, you can start investing into the 2024 Roth IRA as soon as January 1st hits. Usually banks are closed. So as soon as the 2nd or the 3rd, depending on the next open trading day, that's when you'll actually be able to invest in it. RJ, like I said, man, there's a reason they limit this. If not, every wealthy person would be investing in Roth IRAs. There's a reason why the government limits tax-free stuff. Are you eligible? So when I always talk about being eligible, it's just, are you making money? Are you legally making money? Is there taxes coming through this? Is there a way are you filing taxes essentially, right? But you can actually open IRAs for family members, for kids. You can actually have a spouse. Well, we'll talk about a spousal IRA. So let's say, RJ, you're married. Maybe your wife doesn't trade. But hey, that's another 6K that you can potentially trade with, right? So that's 12K. And obviously, you're going to be having to manage different accounts, but it's just a great way to start investing long term, especially if you have it as a couple, right? As you as a couple decides like, hey, we're going to take this investing thing a little bit more seriously. We're both going to commit to 6K a year. We're going to take very safe trades, maybe not be too risky with this, and continue to grow that, right? So you do have that leverage. Now, these are the limitations that you're going to start seeing as well as how much money you can make. So they limit you on everything, how much money you make, how much money you put in, when you can take it out. Again, there's a reason why they're doing this, right? They're making it as hard as possible. You see, guys don't take advantage of this. But essentially, it's going to be at 129,000 to 204,000. That was in 2023, and then 2023 it went up to 138 to 218. I'm noticing as the years go on, they keep increasing how much money you make. I'm pretty sure this has to do with inflation too. And in 2024, I believe it's changing as well. This is where like it actually breaks it down money wise. Again, this is for 2023. And then for marriage, right? The marriage hold is going to be a little bit different as well. It's going to be higher. This is the spousal Roth IRA, RJ, that I was talking about. So you can actually fund a Roth IRA on behalf of your married partner. And again, it gets very, very specific on what you can actually do there. This does not apply to every single person, right? Not everyone is married. Is my screen not showing, James? Are you going through a slide? Yeah, are you guys not seeing the slide? Or what are you guys seeing? No? Holy shit. Screen is out of whack. Great. This whole time I've been showing a slide deck. My bad, guys. Let's see if we can fix that. Is this better? Can you guys see it now? I'm so sorry. Chat. Yeah. All right. Now let's go back to the numbers. I'm so sorry, guys. Here they are. Eligibility for Roth IRA. Nah, man, you guys should have said something earlier. I feel so bad. But yeah, they're constantly changing these, right? 138,000, 218,000 tax year for 2023. And then the other one, so if you're married joint, right? If you're married and you're filing joint taxes, 218 to 228, right? So those are the differences between married and then single 138 and then less than 153, depending on how you're filing your taxes. I'm so sorry, guys. I didn't know it was not showing. Fuck. I feel really bad. Spousal or Roth IRA. So you have to be married. You have to file joint taxes together. The person has to have a compensation. Again, we were talking about they need to be making money somehow. They can't pass the taxable limit, which is what we talked about, right? The 218. So those are the little bits, but you could open a spousal Roth IRA if you're married, right? So that is something else that you guys could take a look at. Now, this is probably what you guys are really interested in. It's like, cool, Mario, we can make tax-free money. When the fuck can I take it out, right? Or like, how can I take this out? When am I eligible to take it out? There are, I don't want to call them loopholes, but they're part of the rules, and I'll teach you how to take certain thing out. Now, RJ, we'll go back to your example, right? You're saying 6K. I put in 6K for 3 years. I put in for 2020, 2021, and 2022, right? So now I have 18K. I have 18K inside of my Roth IRA. Let's say I never traded it. Now for 2023, we add it. And then, yeah, so if your future annual income is more than 218, yeah, you can, RJ. That's where I would take a look at backdoor IRAs. And that's a whole different thing. And then if you want, and one day I might have someone come in. I think someone in the server does it. And I'm not going to push anyone to do it. But I do know that very wealthy people like to invest money inside of life insurances. So they'll invest like money in life insurance and they'll max it out as much as they can because there's no limits on certain things like how much you make or none of that. Obviously, it's based on your health. What they'll do is they'll literally just hide money in there and then they'll just take loans against it. when the economy drops or when the market drops, and they'll just pull a loan against their own life insurance and then just throw that in the market. I've just seen it time and time again. I would love to learn more about that and teach it to you guys one day. Just because I personally invest in one, but those are like those really cool wealthy shit that you just hear about, right? Like no one talks about them, but they're there. Or like that other option, where you can literally open an account for a kid that's not even born yet, and you can just build wealth in there, and it's tax free as long as it goes to education. It's like, bro, there's so many wealth hacks and tricks that the wealthy use because they've either educated or they pay someone to teach them how to do it. And that's the shit that I'm trying to give back to you guys, right? Because my family never knew about that. Like I never knew about that. I never even knew about this until I came here. Right. So if you guys get the opportunity to use this and make your life better, then I did my job. Right. And that's what you guys are here for, is to learn. But anyways, going back to qualifications, let's say I have 24K in my account. Let's say I flip that to for math's sake, we'll put it at 25, and then let's say I flip it to 50. I have 25K that I have contributed over the past couple of years, right? And now we have it at 50. I can legally pull out that 25K tax-free because the Roth IRA does not know the difference between the 25K that you've contributed and then the 25K that you're pulling out, right? So if there's an emergency, let's say you need money, for whatever reason you need money, you can always pull out whatever you've contributed into your Roth IRA, right? So keep that in mind. Your money is not stuck there. If I contribute 7K, yeah, before 59.5, Aaron. Again, example, right? I've done 5 years and I put 5K, that's 25K. I take that 25K and I flip it to 50K. I can pull out 25K and no one's going to say anything because that's what I've contributed to my Roth IRA. I personally contributed. That's not what I made. Now, anything past that, you are going to get charged taxes and fees. And that is pull out after 5 years, though. No, RJ, doesn't matter. It's based on the contribution. If I contribute 5K a year for 5 years, that puts me at 25K, right? You're all with me? 25K, because I've invested 5,000 for 5 years. I take that 25K and I flip it to 50K. So now I have a $25,000 of profit. Well, guess what? I'm pulling out my contribution of 5 years of 5,000 of 25K. I'm pulling that out. I do not have to pay taxes on that because I contributed. Okay? Look, it's literally the first sentence, guys. Anytime you may withdraw contributions from your Roth IRA. That's the first sentence in the slide. But yeah, it is wild, Aaron. That's the beauty of this. That's the beauty. And you know what's crazy is, like, again, I don't recommend it. Not my favorite thing. It really depends on, like, if I put money in a Roth, will it grow in Robinhood, or should I invest in shit? Okay, so I was literally about to get into that, Pri. I see some of you guys killing it with Matt Flips, like fucking killing it, right? And I've been able to finally have time to jump into his lives, and dude's a beast. Some of you guys are making a lot of money with Zabe. Some are making a lot of money with other analysts. But you guys are all getting charged taxes on that, right? But like, if you're consistently making money every single day, you might as well get a tax break from it, right? But there are cons to this, and I'm just going to say them now. You cannot write off losses in a Roth IRA. With a regular account, you can write off your 3K losses. By the way, do people know that if you lose $3,000, you're up to $3,000. Let's say you take a 6K loss this year. Let's say 2023 wasn't good for you. You took a 6K loss net right after everything. When you go file taxes, you can write off $3,000 worth of losses on your taxes. So what that does is, let's say I make 100 grand. The government says, okay, Mario, you owe me taxes worth based on your 100 grand. And I'll be like, no, IRS, actually, I owe you 97,000 because of my 3,000 deductions that I've lost inside the market. Doesn't matter that I lost 6K. I can only file up to 3K. But the cool thing is that those 3K actually roll over. So if I lose 3K, or if I lose 6K now, I can write off 3K. And then in 2024 taxes, I can write off those other 3K as well. Again, go to your, there is some type of realized and unrealized. Yeah, so that's the realized loss and unrealized loss. But in this case, you have realized loss. You realized loss was 6K, right? This is just an example. You can't do that in a Roth IRA. They do not let you write off your losses. I think that's like one of the biggest cons of having one, is that, right? But besides that, I think you're fine. Now, again, I don't encourage you guys opening Roths and like baby fucking brokers like Robinhood and Webull. Stay away from that. Just open it with Schwab, open it with Fidelity, open it with E-Trade, opening it with these big brokerages. Don't mess with the little guys. I wouldn't go risky on here. Well, TD Ameritrade doesn't exist anymore. Schwab bought it. That's why I say I'm Schwab. Yeah. So I wouldn't do anything crazy here. Like, I wouldn't YOLO in here. I wouldn't play earnings. I wouldn't do any of that. This is for like, maybe you want to build a dividend account. You can do it here. Maybe you want to do really long-term shares. You can do it in here. If you want to do, again, consistent trading that you're being very strict on, you can do it in there. A lot of people just use this for like shares and long-term options, but I've seen people use it successfully, right? So just be careful with it, because again, you're limited onto what you can put in versus like a regular account. Let's say you blow 5K, you can't put 5K back in there, right? No, okay, Pri, I think I understand your question, and thank you for. So you have to actively trade this. You don't just put it in and then money comes out. You have to actively trade it. You could put it into a dividend, like let's say T, or trying to think of like another very heavy dividend based stock. In theory, you could just leave it there and it would pay you dividends over time, but you could actively trade it as well. You guys have to actively trade this. Please, before the end of the lecture, let us know of the safe ETFs or shares you have in your Roth IRA account. Well, it's funny, RJ, I actually used to do an ETF lecture after this so that people understood ETFs and indexes and understood why we watch them and why we trade them, right? So I'll mention some of the stuff that I like to trade. In fact, I remember during that lecture, we would have top favorite picks of dividend stocks that we had, or top favorite indexes that the other I'm blanking on the name. Sorry, that the other traders have. But anyways, let's go back to the Roth IRA, guys, before I start going on tangents here. But yeah, so like, you are able to do that. Normally, you're only able to withdraw after everything for no penalties and taxes after 59.5 and after it being open for 5 years. Here are the little loopholes that actually allow you to pull prior to that with no limitations, no fees, no penalties, right? So the big one, there's some big ones, like if you become disabled, if your beneficiary, if your assets become distributed because someone else is the beneficiary, right? You die, you have, you're adopting, you're having a baby, there is certain education, if you're buying a new house. All of those are little loopholes within the Roth IRA system that lets you pull out even after contributions, right? So those are different things that you can use to withdraw if it qualifies. So that's always changing. I would keep an eye out if you ever get to it. And I know someone who actually did it, grew his Roth IRA. He's like, hey, I'm buying a house, and was able to pull out money tax-free to use to buy his house. And he was actually originally part of the server. So it's really cool to see that kind of come full circle. 5-year rule, I think we talked about this. Someone asked me, what are the penalties? Withdrawal of earnings of subjects to taxes and or a 10% penalty, depending on your age and whether you've met the 5-year rule, right? So under age 59.5, subject to taxes and penalties. You may be avoided. This is the one I was talking about earlier. You may avoid taxes and penalties if you use the money for a first-time home buyer purchase. It's up to $10,000. If you have a permanent disability, you pass away, or someone and your beneficiary takes the distribution. If you're older than 59 and a half, you can take it all out, no taxes, no penalties. If you don't meet the 5-year rule, let's say for whatever reason, you open one up today, you're trading it, you're 4 years in, you're like, fuck it, we're going to take some money out. Earnings are subject to taxes and penalties. You may be able to avoid the penalty, but not the taxes if you use that for a first-time home buyer, right? So there is very specific wording that you guys need to pay attention to once it comes to this stuff like that. And this is where I recommend you guys go talk to a tax professional to make sure you are following the rules correctly. My job uses Empower for the 401k. Is that the same as a Roth IRA? No. So says a 401k and Roth IRA are completely different things. They both serve their purposes. I have both, right? With my employer, I also have a 401k. I have my personal Roth IRA, and then I also have the employee purchase plan, which essentially allows me to buy stock from my company and invest in that at a 15% discount, right? So if you work for a job personally, especially if you actually believe in what you're working in, I highly recommend you take advantage of, if they have it, the employee purchase plan, EPP, because it's essentially, it's free money, right? On the front side, yeah, you're taking a hit. Like my paychecks are a lot smaller because I'm not getting all of that money. It automatically pulls it into to purchase them. But the cool thing is, like, I think like the first year I did it, I made like 12 grand just because of the stock being bought at a really cheap price, and then it went up, right? So that's pretty cool. I think little stuff like that is what makes you wealthy in long-term situations. I hope that answers your question. Withdrawals and non-qualified, I think we kind of went over this. Again, the other ones like medical insurance, just medical expenses, higher education, adoption. So either like for children, for childbirth, for adoption expenses, you can use it up to 5,000, right? So like there's, again, all these really cool little loopholes that you can use. Let's say you're stuck in a pinch one day and I don't know, you're married, you have a kid, for some reason you needed a little bit of extra money, you can dig into the Roth IRA and pull stuff out without having to worry about that stuff, right? So just keep that in mind as you guys go. Again, this is a longer term thing. This isn't something we're going to be taking or pulling out of in the first couple of years. I've known someone who had to, and they were grateful that they had it, right? A key takeaways, nothing too crazy. Everything is just like almost like a recap of what we've talked about. But again, like, it's funny because I think in 2022 the limit was 6,000. Now we're at 6,500, and then the big one is going to be 2024. Is we're going from 6,500 to 7 grand. That's huge. That's literally an extra grand in 2 years that we've changed. And I'm excited because I think this allows more people to invest more money. And again, that range is increasing every single time, from 146 and 161 to 138, 150, 153,000. Now married is going to increase even more to 230 to 240, right? So things are changing moving into 2024. And then the last thing I wanted to talk about, and I wanted to show, maybe I'll show this one. And if you guys haven't seen this, and I'll be more than happy to share this with you guys. This is actually made by an old member of ours. And it was just for you guys to visualize what it actually looks like to compound something long term. And here's the cool shit, right? I mean, I was literally, and Flips, I think, is doing an amazing job of teaching stop losses, position sizing. He is doing just a great job of like, hey, we made money today. There's no reason to overtrade. And I know a lot of you guys are attending his classes, right? But I loved what he said today in the morning. He was like 3% a day. That's insane, right? 3% a day. That might not seem like a lot. This table that we're looking at right now is based on a 5% gain a month. right? You're talking about 3% a day. This is based on 5% a month. And while you look at it, right? So this is based on a 6,000 year contribution. It's not. God damn it. Is it doing it again? How about here? Can you see it? Perfect. Okay, so this table is based on a 6,000 contribution, right? Let's say you open your Roth IRA today, you throw 6 grand into it. You take it from January to December of next year. This is estimating 5% on a port. Bro, I see some of you guys making way more than this in one day on Flips' trades or Zave's trades or anyone's trades. So you end up with 10K. Not exciting, right? It's not sexy. This is why people don't do it, because it's not sexy. It's not cool. You can't flash this shit on Instagram. But it's like a year two. You contribute another 6K. You get put to 16K. You do another great year of 5% a month on the port. You end up at 28K. Okay, that doesn't seem bad. 2 years, 28K, not bad, right? Like, starting to look pretty good. You know who does a really good job? Started 1K actually does this. He does a fantastic job. He has proof. He's shown it to me. That guy used to attend my lectures when we first started back in the day. It was great. Now look at him, right? Year three, introduce another 6K. We're at 36,000 now. By the time of year, you're at 61K. Again, only 5% a month. That's it. That's all you're growing your port is 5% a month. Again, some of you guys are growing your port 5% in a day, but you guys are greedy and you keep growing and growing and you keep trying to get more and more. Let's skip a little bit. Let's go to year 5. you contribute another 6K. You're not 133,000. By the end of the year, if you do everything successful, you should be at $227,000 in 5 years. It's insane. It's to think that if all you have to do is grow your account 5% and add another 6K, that in 5 years you'll have $250,000. Sometimes people can't fathom. And this is why I love having this and why I encourage you guys to almost print it out and have it next to you. Because when you're getting greedy, if you don't want to take profits or you're up 10% of the day and you want to keep trading, why? There's no reason to, right? Let's jump to 10. You jump to 10, you're at $2 million. You're like, Mario, this is not possible. Do the math. I'll share you this table. I have nothing to hide, right? This is how Peter Thiel did it, right? He was able to grow his accounts in a crazy amount. By the time year 15, 84 million, if you were to correctly do it. Now, if you want to go really crazy, you can go into the billies by the time like year 30, but it's just discipline, right? And there's another one too that I'll share right now. And I learned this one is a little bit more conservative. This is a 2.5%. So it takes a little bit longer, right? This one's 2.5% gains. So essentially, Aaron, you're contributing $6,000 to your account, and every month you're making 5% of your portfolio. That's it. That's all you're doing. You're just trading your account, and you're able to make this much money. Yep. And I'll make sure to share these with you guys so that you guys can actually have them and look at them and maybe use them, right? But that is it. That's essentially it, guys. Do you guys have any questions regarding the Roth IRA, the concept of long-term investing, how to make money, how to save money, any of that? If not, I'll let you guys leave a little bit early and we'll give you guys back some 15 minutes. And I hope you guys learned something today. Yeah, man. Happy to help. If you guys have any questions, feel free to reach out on Discord. So do I actively trade? Yeah. So right now, like I'm in some Apple. I also have Apple stock. I'm gonna probably alert some travel soon because I really like where travel's at. I just wanted to finish this data that comes out tomorrow. So just be careful because bro, don't even talk to me about DLA, man. I'm fucking pissed on DLA because I was listening and I get it. And I had a long talk with Telio. Telio and I always talk a lot. We were talking about risk to reward this whole concept of like risk to reward and like having a concrete entry on DAL. He actually entered I think he entered 35s. Where did he enter? He told me the other day. We were just trying to go back and forth on DAL. He entered like 32. He entered 32 calls. And he got them in pretty cheap. And he got in before the data. But it's like the data could have came out bad and easily, you know, sent us back. So I'm actually waiting on a pullback. Just DAL financially makes the most sense. But I'm looking at Love, DAL, and UAL. Those are like the three big airlines that I always look out to. So in a year, what percentage the Roth should be? 50%? No, it depends. It depends on you, right? Like I build mine slow. Most of the people I know build it very slow. I think getting rid of expectations on where you should be, like there's a good thing to have a goal, but then there's like what people have is like expectations, like, hey, my port should be 1 million by 10 years. Like what? Like, what's your plan to even get there, right? So like don't look at those numbers of what it should be. Use that as a guide so that when the next time your port is up 10%, or if you're only gaining X percent, right? Whatever percent you are, think of it as a long-term thing. Don't think about this in a short-term thing. That's the whole point of that chart. The chart isn't there to show you that it should be at a certain point by a certain time. So you get a small portion of your IRA aside for option swings, day trades, and then, but yeah, Alex, that's exactly what I do. I've contributed enough to where, and I've made enough money in it to where I can mess around with certain things. It's up to you. You are the owner of your Roth. You are allowed to do whatever you want with it. That's up to you, right? Personally, I like to play it as safe as possible. But like from what I'm seeing is like you guys are killing it with flips. You guys might as well fucking open a Roth with all those gains and get some tax-free money out of that. Just be careful with it. He's careful with his trades. I know he is. Like, he's only opening 10 contracts based on his portfolio size. So do that with yours, but whatever fits your portfolio size, right? Don't be overzealous. Don't be over greedy. Be smart with your money and think of this as a long-term thing. Anyways, guys, that's it for me. I hope everyone has a wonderful night, and I'm excited for tomorrow. We have PPI, we have CPI, we have a lot of data coming out, so that's going to be a very volatile market and should be fun. Have a good night, guys. Thank you.